Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, March 18th. Hope you guys having a great day. We do got a few economic data to go over, and this is going to be stuff on the housing sector. So let's jump right into it. We'll start off with the housing starts for the month of February. In January, we had 1.624 million annualized units for housing starts, which was great. Forecast, however, was supposed to dip a bit down to 1.493. But it did dip, but not as bad as the forecasts were projecting at 1.599 for the month of February. Now, future housing starts here, we got the building permits. In January, it was at 1.550 million, and forecast was supposed to dip down to 1.5 million, and it dipped a little bit further, 1.464 million. Now, of course, we could probably expect this to even shrink more once we see March and April's uh, data, as the economy is obviously in decline right now due to obviously the coronavirus outbreak and the quarantines and everything else. So we'll start seeing stuff probably next month when we look at March numbers as well as April's and going forward, as a lot of these data would come out in a month or two behind the times here. Let's jump ahead here to the headline news. We got stocks are down so far this morning. They rebounded a bit yesterday, but today they are down. The Dow is down about 1,500 so far this morning, so a lot of concern again. Uh, there was government stimulus. It sounds like it's supposed to be coming out here pretty soon. We don't know the exact details of it yet. There's a lot of speculation out there where it could be direct to consumers, where people can maybe get $1,000 from the government, to direct assistance to small businesses and corporations to help keep people from being laid off and stuff, to help support them from tax breaks. A lot of different variations, but we don't know yet the details. And it sounds like will hopefully be rolling this up maybe as soon as today. They're talking about midweek, so obviously that would be today. Fed also rolled out another move today regards to a paper facility for commercial for commercials, and so that way to create more liquidity in the commercial business. So that's what they're trying to do on that side of things. So again, just the investors are really concerned about how long this is going to last. That this could be lasting for quite some time, and the effects of that were it's going to put a lot of strains on small businesses, other businesses. Stephen Newton mentioned that if they didn't act on some of this stuff now, this could, jobless rate could obviously go up to like 20%. So, and he's probably not exaggerating on that, as a lot of industries couldn't keep supporting their employees if this is prolonged, and they themselves don't have money, probably file bankruptcy and such. So this is trying time for all, and hopefully we will weather the storm and come out stronger on the other end. Let's see how this is faring in the mortgage-backed securities, and which is kind of tanking a bit now. We are getting a lot of pressure. We were up here. We started off here down from where we were yesterday. Right now we're testing the 25-day moving average. Right now we're about 89 basis points, down about 89 basis points, which will translate to higher pricing or higher interest rates. It's getting pressured by the yields. As you can see here, yields are shooting way up here. And right now we're up about 1.13. The reason is up so much is that, with all these stimulus packages, there's going to be cost to it. The government's talking about debt of about $1.3 trillion, and basically there's going to be oversupply of debt out there. So, the Fed buying some of this is going to help, but, there's a lot more players in the market that we need to buy, and if there's not demand for it, yields are kind of jumping up as a result of that. So this is what's kind of creating the pressures, is the rise in yields, because the government's putting itself into even further greatest debt we've seen for quite some time, since I think probably 2008. $1.3 trillion is what they're talking about. So to support all these programs that they're trying to implement for this crisis. All right, so that's pretty much a wrap. Again, rates are up again. If you guys are in California looking to buy or refinance, please feel free to reach out. You can direct message me or email me. Email is the quickest time. We'll be more than happy. We'd love to help you guys out. You guys have a great rest of your day. Thanks so much for watching. We'll see you in tomorrow's video. Bye-bye.